Hey guys, welcome back to the channel. So Bitcoin's price has recently fell about 50%, and it probably has further to drop from here. If you don't already have Bitcoin, is this a good time to get in? If you already have some, should you sell or should you find an opportunity to buy more? The point of learning about personal finance is to lower your anxiety when it comes to dealing with money and making well thought out financial decisions so you can sleep better at night. Learning to deal with the ups and downs of the markets is part of this process. At some point in a financial journey, everyone's going to run into volatility. It's just a reality of investing. After all, if Bitcoin's price doesn't move, how would you expect to make a profit from it? So in this video, I'll be talking about how to be comfortable with volatility and just how to deal with market fluctuations in general. To not get stressed out by the volatility, it helps to do just two things. One is to understand what you are buying, and two is to have a long-term outlook. If you do just these two things, volatility shouldn't give you any problems.
Warren Buffett said you should stay within your circle of competence. Peter Lynch says you should know what you own and why you own it. And Phil Town says you should concentrate on investing in areas where you have the greatest familiarity. These investment gurus kind of have their own spins on this particular topic, but it all boils down to the idea that you should understand what it is that you are buying. Once you understand something deeply, you can build up an investment thesis around it. Your conviction will be stronger, and you're more likely to stay invested and not sell when things get tough. If you have a strong reason for why you want to buy something, then unless your reason changes, you can just simply ignore the noise. In fact, if you think about it this way, volatility can actually work in your favor. For example, I've done some research on Bitcoin, and I'm still bullish long term based on some compelling evidence. So large corrections like this one is actually an opportunity for me to buy more Bitcoin at a lower price. And Bitcoin has about the same volatility as Amazon stock. So in the early 2000s, Amazon shares dropped 95%. It went from over $100 per share all the way down to under $10 a share. And during this time, if you look at the chart, it's actually really bad for investors who sold out along that trend. But what was going on with the underlying company? So I have here a 2001 annual report from Amazon, and we can see that, well, 1998, the company made $609 million top line. This is in thousands, so just times that by 1,000. The next year in 99, the company made 1.6 billion, and then 2.7 billion after that, and then in 2001, $3.1 billion. So that's a lot of money, and it's growing every year. And also the gross profit is growing at a pretty good pace over that time frame. And the internal structure of the business was quite solid. It was opening up a new marketplace to enable third-party orders, and it was partnering with other companies like Toys R Us to expand its business. So fundamentally, the company was doing great, but obviously the stock did not do so well. This is what Warren Buffett meant when he said that price is what you pay, but value is what you get. And the reason there was a lot of selling here is because people were scared. They were nervous. They were just looking at the stock, but they weren't looking at what the company was producing. So when you're investing, always understand what it is that you're buying, right? You're not buying just a chart that goes up and down. You're buying something that has fundamental value, whether that be Bitcoin or stocks or anything. And the good thing about investing this way is you don't have to particularly time the market perfectly. You could be patient with this strategy and then just wait for a good time that you think the market has bottomed out to go in. In fact, Amazon sales continue to increase. By 2003 here, it was making over $5 billion. Its revenue was basically twice as high in 2003 as it was in 2000. And yet the stock in 2003 was like $20, like much lower than in 2000. So even if you waited until you were pretty confident that, Amazon was a real business and it was going to do well, and in 2003 you decide to get in, that still wouldn't have been too late. Like that would have been a really good entry point into Amazon, especially now if you think about like what the company is worth, which is like over $3,000. So if you understood what it was that you were buying back then you wouldn't have worried about the stock chart going down so much. You wouldn't have sold out of fear. In fact, you would have bought when everybody else was scared. So was it a good choice to sell Amazon back in 2000? Well, it depends on your time frame. Short term, over the next 1 or 2 years, for sure, you would have saved yourself a lot of money. But long term, definitely not. You can potentially make money trading in and out of the markets short term, but that's very difficult to do and it's not really recommended.
A much easier strategy is to just play the long game. Markets can be highly irrational short term, but eventually the market reflects the real value of the underlying asset. So, for example, why is Apple the largest publicly traded company in the world? Well, because it makes investors the most money. So, back to the Bitcoin chart again. You can see the last couple of weeks, there's a lot of people selling here because they're thinking if they take their money out now, then at least they're not at risk of losing more money. But remember that reducing short term risk can actually hurt your long term return potential. Just like the Amazon stock, if you understand what it is that you are buying, then you can see this as a potential opportunity to get in when everybody else is getting out. So you have to be prepared for the volatility and see beyond the short term fluctuations in the market. The irony is that the more something goes down, the harder it is psychologically for people to buy it. And, that's usually where the best opportunities lie because the time of maximum market opportunity coincides with the time of the maximum pain or fear. So, in terms of when to be adding more, that kind of depends on your personal situation. I'm not a technical expert, but if we take a 50-day and a 200-day moving average, we can see the price has actually crossed below the 200, so that is not a good sign. Most likely it has further to fall. Looking at the RSI, it's also still going down. The MACD does not look good as well. So you want the purple line here to basically cross over the orange line here for there to be a positive buy signal. But right now I would probably stay away from this and just continue to monitor it. So I'll keep an eye on this and I'll probably buy more once the technical indicators have improved. So consider subscribing to the channel if you haven't already, and then that way you won't miss any new videos in the future. So on Twitter, Dan Tapiero posted this timeline on Bitcoin's historical corrections. And we've seen a lot of major corrections over the years, some at 82% or higher. So this 50%, 60% correction is not out of the ordinary. And each time in the past that Bitcoin went down, it just came back stronger than before. So if you believe that this time Bitcoin will also recover, then now would be a good time to start looking at starting a position, or if you already have some, adding more. But again, before you invest in anything, you need to understand the underlying asset and you need to have a strong reason for why you believe it is a good investment. For example, I'm using it as a way to diversify from stocks and bonds, and I'm also using it as an inflation hedge. So over the last month, the reasons that I've bought haven't really changed at all. So only the price of Bitcoin has changed, but nothing has changed about its underlying value. So do your due diligence, rely on your own knowledge, and make sure you have a long-term horizon to ride the ups and downs of the market. Anyway, those are just some thoughts I had about Bitcoin and volatility. Thanks a lot for watching. I hope you enjoyed the video, and I'll talk to you in the next one.